What's going on, guys? The market just hit a record high. But today we got a retail sales report that says the American consumer might be tapping out. July retail sales dropped 0.6% month over month. That's a miss. And it matters, because consumer spending is about 70% of GDP. Let's break it down. On August 14, the Census Bureau dropped July's advance retail sales report. Total retail and food services sales came in at $763.6 billion. Sounds big. But the month-over-month number is what traders care about. And that number fell 0.6%. The consensus was looking for a gain. So this is a clear miss. Now, the headline year-over-year still looks okay at plus 5%. But that's old news. The trend is what matters. And the trend just turned negative. Here's the control group, the number that feeds straight into GDP estimates. It strips out volatile autos and gasoline. The control group fell 0.2% month over month. That's not a crash. But it's not growth either. It's a slowdown. Let's look at the losers. Online spending, non-store retailers, fell 2.2%. That's Amazon, e-commerce, the whole digital economy pulling back. Motor vehicle and parts dropped 1.8%. Cars are getting harder to move at these prices and rates. Gasoline station sales fell 0.9%, though a big chunk of that is just lower pump prices, not necessarily fewer gallons. Electronics stores fell 0.5%. Food and beverage stores were flat. So people are still buying groceries, but they're not buying extras. Now the winners. Clothing and accessories rose 1.9%. Health and personal care rose 0.7%. And food services and drinking places rose 0.5%. So people are still going out, still buying clothes, still getting haircuts and medicine. But the big ticket stuff is stalling. The real story here is the contrast. The S&P 500 hit around 7,800 this week. The VIX is below 15. The market is pricing in a perfect soft landing. But the consumer data is starting to roll over. Record stock prices do not mean record consumer health. If the consumer keeps slowing, earnings follow. And if earnings follow, that record high starts looking like a trap. Not saying it crashes tomorrow. But the divergence is real. Follow the money. See where it's going. And be careful when the market prices in perfection while the data says otherwise.